Last month, my friend Rahul called me in panic. He had just realized he picked the wrong tax regime and lost 47,000 rupees. 47,000. Gone. Just like that. And here's what makes it worse, he's a CA. A chartered accountant chose the wrong regime for himself. If this can happen to a CA, imagine what's happening to the rest of us. Today, I'm going to show you something nobody else is doing. Live calculations. 5 different salaries. Real numbers. And yes, I'll also tell you the secret to switching regimes mid-year if you've already made the wrong choice. Stay till the end because one of these salary brackets is definitely yours. Namaste and welcome back to FinanceFlow Media. I'm so glad you are here because this video might literally save you lakhs over your career. Every year, crores of Indians make this choice blindly. They either stick with what HR told them, or they pick whatever their colleague picked. But here's the thing, your colleague's financial situation is completely different from yours. Their home loan, their investments, their HRA, none of that matches your life. So why would their tax regime choice work for you? Today, we are ending this confusion forever. I've built a complete calculation for 5 different salary levels, and I promise you, some of these results will genuinely surprise you. Let's dive in. Before we jump into calculations, let me quickly explain what changed in 2024 to 25 because this matters. The new tax regime got even sweeter this year. Standard deduction increased to 75,000 rupees from 50,000. The tax slabs got revised. And the rebate under Section 87, a means income up to 7 lakh rupees, is now completely tax-free in the new regime. Sounds amazing, right? But wait. The old regime still lets you claim HRA exemption, ATC deductions up to 1.5 lakhs, home loan interest up to 2 lakhs, NPS contributions, health insurance, education loan interest, the list goes on. So which one actually puts more money in your pocket? Let's find out with our first salary level. Salary number 1, 6 lakh rupees per annum. This is entry level for many IT and corporate jobs. In the new tax regime, with 75,000 standard deduction, your taxable income becomes 5.25 lakhs. Tax payable? 0 rupees. Thanks to the 87 a rebate. Now old regime, same 6 lakhs. Standard deduction 50,000. Let's say you have ATC investments of 1.5 lakhs and basic HRA exemption of 1 lakh. Taxable income becomes 3 lakhs. Tax payable? Also 0 rupees. So for 6 lakh salary, both regimes give you 0 tax. But here's the catch, in old regime, you need to actually invest that 1.5 lakhs. In new regime, you keep that money liquid. Winner for 6 lakhs. New regime. No contest. Salary number 2, 10 lakh rupees. Now things get interesting. New regime first. 10 lakhs minus 75,000 standard deduction equals 9.25 lakhs taxable. Using 2024 to 25 slabs, your tax comes to approximately 54,600 rupees after rebates and cess. Old regime calculation, 10 lakhs minus 50,000 standard deduction. Now add ATC of 1.5 lakhs. HRA exemption, let's say 1.2 lakhs for a metro city. Medical insurance 25,000 under 80D. Taxable income becomes 6.05 lakhs. Tax payable? Around 32,500 rupees. Old regime saves you over 22,000 rupees. But only if you have all these deductions. If you don't pay rent, old regime becomes worse. Write this down. Salary number 3, 15 lakh rupees. This is where most confusion happens. New regime 15 lakhs minus 75,000 equals 14.25 lakhs taxable. Tax approximately 1,45,600 rupees. Old regime with full deductions, ATC of 1.5 lakhs, HRA of 1.8 lakhs, ATD of 25,000, home loan interest of 2 lakhs. Taxable income drops to 9.45 lakhs. Tax payable? Around 93,600 rupees. Difference? You save 52,000 rupees in old regime. But notice something, I needed a home loan and rent both. Most people have one or the other, not both. Salary number 4, 20 lakhs. Let me be honest here. New regime tax comes to about 2,49,600 rupees. Old regime with maximum possible deductions brings it down to roughly 1,95,000 rupees. Savings of 54,600 rupees in old regime. But here's the reality check. To get old regime benefits, you need to actually have these expenses. You need rent receipts. You need investment proofs. You need actual home loan EMIs. If even one major deduction is missing, new regime can become better. Salary number 5, 30 lakh rupees and above. At this level, you are likely a senior professional or business owner. New regime tax approximately 4,63,800 rupees. Old regime with every possible deduction maxed out, around 3,82,200 rupees. Difference of over 81,000 rupees favoring old regime. But here's what nobody tells you, at 30 lakhs, many people have company-provided housing, so no HRA. They might have finished their home loan. Their ATC is limited to basic contributions. In that case, old regime advantage shrinks dramatically or even reverses. Now the question everyone asks, what if you already chose wrong? What if you selected new regime?